Nvidia shares up about 40% so far this year. And it's February. Have I got that right?
We are in the month of February.
And ahead of its quarterly results after the bell today, it's a leap year, you know. We get an extra day. The expectations are sky high for one of the world's most valuable public companies. Stock fell nearly 4.5% yesterday, its worst day in several months, shedding $78 billion in market cap, the largest daily loss in its history. Joining us now with what to expect is Joseph Moore, Morgan Stanley semiconductor analyst. And we made the point earlier, Joe, that the results we're expecting today are the kind of results that would explain the movement in the stock over the last couple of years. I mean, it's phenomenal.
Yeah, I think that's right. You know, we're wrestling with very high expectations. We early in the year started to react to some of the supply chain data points showing very strong end demand. And then I think more recently, the stock responded pretty well to a lot of the hyperscale commentary pointing to the magnitude of investments in AI and things like that. So it should be a very good quarter. And as you said, you know, it has been selling off a little bit into it as there's anxiety about those expectations. But certainly results are expected to be very strong.
We were actually, I guess it was off camera, talking about how to value anything. And it's, you know, especially in the stock market, it's difficult. I don't envy anyone trying to value Nvidia, regardless of what they say today. How much of the price you're seeing right there are expectations for how AI progresses over the next 2 or 3 years? A lot of the $700 has to do with that, doesn't it?
It does, although I would say, you know, we've seen actually more multiple expansion in other names associated with AI in my coverage. You know, Nvidia, the numbers have been very strong. When this surge in AI started, we were earning less than $1 a share. My expectation is we're guiding to north of $5. So we're guiding to more than a $20 run rate. And it's still quite strong. And we still have a product cycle ahead of us. So, you know, valuation to me is less of a challenge. And the durability of the strength is more of a challenge, you know, because we have seen this significant surge in investment, obviously stays strong throughout the near term here. The question is, do we see follow through where we see growth next year? And I think that's a little trickier to figure out because you see the breadth of applications, the surprising number of companies developing these models, the venture capital interest in developing these AI models. All of that is sort of difficult to predict in 2025. And that's an element that, you know, Nvidia will probably sound pretty good with this product cycle ahead of us, but can't really give you a lot of visibility beyond, you know, the semiconductor normal visibility. And so I think we need to hear that from customers. And I think that's why, you know, the stock tends to move more in between the quarters when we hear from some of the hyperscalers how significant these workloads are. And so I think, you know, the quarter should be very good. Nvidia should make people feel good about what they can see. But, you know, the real question is kind of what happens after that.
I mean, I want to know what you think the 3-year compound growth rate is for both earnings and revenue. And I mean, would you even try to do that?
Well, from here, it can be challenging. We're modeling 2025, calendar 25, as kind of a plateau year, right? So we have core data center about flat. That's after a pretty steep ramp this year. So we're still getting big upward revision from where we are right now. I really have no idea if that's the right place to be. I think, you know, flat to me is a little bit more, you know, could be up, it could be down. But this is still semiconductors. There's still probably a plateau that's going to happen. But within that flat, there's a lot of growth still, right? There's a growth in the per workload spending on training. There's growth in inference. There's growth in some of the networking businesses. So, you know, there's an underlying growth rate that's pretty strong. I would just like to model it conservatively that after sort of a boom like this, that we have a little bit of a flat spot next year. But it's really hard to tell. And I think that's why the stock is keying off of commentary from hyperscalers that this seems durable, maybe beyond 2024. And then I would say, you know, beyond 2025, I think we'll continue to grow. This company is in a very strong position within AI, and there's a lot of desire to find alternatives and to look at stocks that haven't had the same move. But the reality is the vast majority of AI investment is going to benefit this company. So I think a 3-year CAGR, you know, we don't venture out that far, but I would say certainly we'll grow double digits beyond the plateau. But I am banking on a plateau in 2025.
And you don't see really any competition at this point. You can't even name anyone.
Well, there's a lot of competition for individual workloads. AMD, Intel, Marvell all have seats at the table. Their custom silicon is going to be important. We just find that there's opportunity here and there for those alternatives, but the vast majority of this opportunity wants to be in multi-cloud, wants to have the ability to use the same ecosystem everywhere, and that all kind of comes back to Nvidia. So I wouldn't say there's no competition. There's certainly a lot of desire to have alternatives, but they're in a very strong position. And with this P100 product cycle, it will be very difficult to continue to compete because they're moving the bar forward quite a bit in the second half.
When I think about what we call the World Wide Web and then the internet and how the world looks versus prior to that, I find it hard to believe anything could have that type of to change things that fundamentally with how we do everything. Are you telling me AI is going to be as powerful, 10 times as powerful, not as powerful? What could you say about that 10 years from now?
Well, I think it has the power to be transformative, right? And in Morgan Stanley, we're looking at how this affects a broad range of businesses, and maybe less so than the internet or the mobile internet, but certainly very strong. What I would also say is when you've looked at those prior big tectonic shifts, semiconductors tend to do very well early. Qualcomm and ARM early in the smartphone cycle. You tend to see those things. And I think that's where right now Nvidia is the primary company making money in all of this. Over time, you're going to see that value transfer a little bit from semiconductors to systems to services that are being offered for AI. But right now, it's very hard to ignore semiconductors and AI, because a lot of the foundation that's being paid for the next decade is being built on NVIDIA silicon. So it's a strong opportunity near term. I think that the semiconductor impact will be felt early, and that's why we felt like you kind of need to be in these names now.